Welcome to Coleman Report Live. I'm Bob Coleman. We're talking Main Street and the small business lenders who help it grow. Lance, good to see you, and I'm going to see you in person next week. We're going to do a little filming. John Winnick, always good to see you. Katie, always good to see you as well. So what we're doing, we're switching a little bit. We're going to turn Fridays into a little bit more of a fraud Friday so we can learn from other people's mistakes. That's what we want to do. But we have John Winnick on, and I love John's commentary. If you don't subscribe to his blog, make sure you do that. And you can Google him there, right there, Clark Street Capital. John, what is your voice? And what I mean by that is, who do you write it for, and what topics do you find interesting in your weekly blog?
Yeah, I mean, I think I touch on a few different worlds that, my career is sort of based on. The lending community, the banking community, the loan sale, loan purchase community. So it's kind of things that I think are sort of relevant to all those worlds. I mean, kind of touch on I try not to go too high level, but, things like inflation obviously will affect everybody. So, I will cover some big issues like that. I try not to cover things that like everyone's like talk about ad nauseum. Because they could probably get that elsewhere. And I try to stay out of politics for the most part.
I think that's smart. I think we've had a number of comments. We don't talk politics here. I mean, we do talk politics. We're very bipartisan on that. So, and that's what we do. Yeah, our voice is, we talk about stuff you don't get anywhere else. We don't talk about Wall Street Journal stuff. We're assuming people read that. Obviously, we bring in John Rios, the American banker, let him talk about his. But we like to have you every now and then to come in and talk about a macro perspective. So we appreciate that. Hey, but I want to ask you specific things. Your specialty is trading loan portfolios transactions. SBA Okram the other day said they are very concerned about that transaction when the acquiring lender is acquiring portfolios and there's issues in terms of even getting files and we're servicing and whatever we're doing. What is the market like for that, and what is your experience with that, John?
Yeah, I mean, look, there's always some challenges in selling a portfolio of loans from one part to the other. Certainly, the seller has knowledge built up over the lifetime of servicing, underwriting, and so on the loan. And, typically the buyer is a lot more skeptical of the things that they can't see in the file. For example, as a general rule, sellers tend to overvalue the relationship and undervalue the collateral, and buyers are kind of the opposite. There's very strong demand for loan portfolios now. Banks are really up against the wall with respect to loan growth this year, since PPP will effectively all be gone this year. So in order to grow loans in 2021, you're going to have to be very good at it. And, a lot of the banks that I'm seeing that have grown loans as of late are being very aggressive. So consequently, why not buy some portfolios with 1 to 3 years of seasoning where, the borrowers have made it through this cycle. You can kind of see how they handled COVID, and did they take a deferral? Did they not take a deferral? So on. I mean, obviously the SBA portfolios have benefited from not only PPP, but the government making the P&I payments on 7A and 504 loans was certainly an extraordinary, effort. So yeah, there's strong interest. I guess the problem in my industry right now is just the amount of sellers, right?
Okay.
Because most people are flush with liquidity and got nowhere to put it, and net interest margins in the first quarter of this year were the worst they've ever been. So banks can't deploy their cash fast enough. The Fed itself is sitting on $500 billion of deposits, soon to be $1 trillion. So because the banks don't want the deposits. So, the liquidity issue is certainly something that all banks are facing right now. But liquidity has a way of drying up. So I don't think it'll last forever.
John, I'm a CFO of a small community bank. What's your sales pitch on why I should sell? First of all, I don't have to sell my entire 7. Let's talk specifically SBA or the first position 504. I don't have to sell it all. I can sell off a piece, correct?
Well, I mean, you're talking about two different transaction.
Please.
Yeah, I
Please.
mean, on the 504 side, I mean, you're selling the whole loan. It's really not any different than selling any other commercial real estate loan. Obviously, there's, issues with the third-party lender agreement that a sophisticated buyer will understand anyway. With respect to 7A, typically you can't sell your agency without SBA approval. And so, there's really sort of three sales of 7A loans, right? There's selling down to 10%, there's getting permission, selling down to 5%, and then there's selling your entire agency. The third option, you can only do with permission from the SBA. It's typically a scenario where you're exiting something. So, for example, if, Bank of Illinois buys Bank of Wisconsin and really doesn't like Bank of Wisconsin's SBA portfolio, they could, in theory, sell that entire 7A portfolio. It's tougher if you have an existing SBA book and you want to sell a portion of it. That may be difficult.
Would you want to do? Would you want to do that? Would you want to do that? Would you want to sell a portion or not?
I guess, it's a case-by-case situation. Some banks are very hungry for fee income. They're not getting it in the mortgage area or capital markets and so on. So loan sales can be a very effective way of generating non-interest income. I can't say definitively why you should do or not do something without kind of understanding the bank itself. My business is sell loans, but everybody does. So,
yeah, we know. We don't need to know. Yeah, we know these are private transactions, and we're not asking about if it's whatever.
In 20 years of selling loans, I have literally never had an issue with the seller having, reputational issues in the marketplace because they sold their loan. And I hear that all the time, and it's, a complete red herring. The borrower is happy you did the loan for them. What happens afterwards? Borrowers are surprisingly sophisticated because they're used to their residential mortgage being sold 2 or 3 times.
Yeah. Very good. And when they sell these, they get fee income. So, right?
It depends on circumstances. A lot of my business is selling good loans at a premium, and part of my business is selling distressed loans, and sometimes those are losses.
The bank just wants to.
Yeah, so it's not. It depends on the scenario. But we sold some hotel loans recently at a pretty healthy premium. So there's, my advice to people is if you're thinking of selling anything in the next 2 years, do it now, because I don't think the supply and demand dynamics are going to be as favorable down the road.
Okay. Well, John, we love having you on. I understand we're switching you to Wednesday, once a month on third Wednesdays. So we always love having you come on and tell us what's going on in secondary market and other options on that. I appreciate that. Hey, let's talk about a little bit of fraud. Let's get Katie and Lance in the conversation. Number one, do you feel the media is covering fraud stories accurately? Actually, I'm going to let John go first because Katie and Lance have talked about that. What do you think, John? I know you're probably a little bit more of an outsider.
I think that it's actually kind of surprising. I don't think the media covers fraud that much at all. I think, to me, the most underreported fraud story in the past couple of years is the massive unemployment insurance fraud. You're talking, I've heard tens of billions of dollars,
Right.
So I'm not sure it's something that's, it's probably more likely to be undercovered than overcovered.
Interesting.
I think some of these stories that you have on your Fraud Friday are sometimes, comical in nature or interesting. So, they get some local attention, but I don't get the sense that fraud is covered regularly in the local business papers.
Katie, how do you feel about the poll results? 11% say too harsh. Joseph, throw that back up. A quarter say it's right, and over half say it's not accurate enough. Katie, what's your opinion?
Yeah, that's kind of interesting. I was actually curious how lenders were looking at this, especially when we're talking about PPP fraud, which is the biggest probably the thing that is hitting the media the most right now. You're not hearing so much about the other types of fraud as much. But like John said, there's definitely other types of fraud that probably aren't being covered nearly as much as maybe we'll eventually hear about. Looking at it overall, just general for PPP fraud at least, it was originally estimated that there would be about 5% of the loans that would be fraudulent. And since they've looked into that more and more, we're not hitting nearly that number. The OIG back in the fall said they were estimating about 36% of the loans at the time were fraudulent. And even since then, the Department of Justice has really only confirmed about 0.06% of the loans so far have been confirmed fraudulent. Of course, that is, we are very early in the process of looking into these loans and looking into potential fraud. But if we're at 0.06 right now, I don't think we're going to hit anywhere near that initial estimate of 5%. It's just not going to happen.
Yeah, I think that PPP fraud is probably fairly straightforward. I mean, does the company even exist? So I think a lot of the fraud is probably so obvious. I don't think you need.
And they're cutting deals. Yeah, they're not even going to. A couple of them are going to trial, but they're just saying, "Fine, you got me." Yeah. Lance, what do you think?
Well, I think the coverage has been fine, Bob, but the thing that's interesting is all the fun PPP fraud occurred in round one. The Lamborghinis, the jet airplanes, all that stuff occurred in round one. Round two, there was a giant push for smaller businesses, and there's going to be fraud in that. But it's like I joked with you the other day, Bob, instead of getting a Lambo, they're probably going to get a bike. But there's going to be some fraud in that as well. But I don't think the coverage has been too harsh, certainly. And maybe it could have been covered a little more. But I do agree with Katie. Statistically, when you look at the size of the money that was put into small businesses' hands, the fraud issue is pretty small.
How many bankers have been indicted for PPP fraud? What do you think?
Why? That's a tough one, Bob.
I can't name one.
I need
Yeah, well, we think it's 1 to 5. It's
Yeah.
It's less than a handful. So there's been a couple out there. Remember, now I'm not talking about loan fraud. I'm talking about specific PPP fraud. Now, usually if they're a PPP fraudster, they're probably doing other nasty stuff as well. But it's been a handful. Obviously, we're going to be following that and tracking that down. The reason why I bring that up is, John, one of the pet peeves I've had is after the Great Recession, I think there was one Wall Street banker indicted, and there were hundreds of community bankers that the Justice Department went after 5-7 years later, just ruined a lot of people's careers and livelihoods for fraud that no one lined their pockets. Now, in this fraud, people are lining their pockets. So the fraudsters I think they're going after the right people. And what they allowed the first time around, they allowed all the borrowers to testify against the bankers because they felt, we want to throw that bank president in jail. Who cares about a controller of a wholesale manufacturer?
Well, the fraud involved in PPP is very different, Bob, than what we saw in the last recession. And I think you'll continue to see stories about individual borrowers, but probably not very many stories about bankers.
No.
Yeah. And obviously, if they're there, we're going to nail them. So we're going to do that. Finally, last poll question. What percentage of fintech lenders have been flagged for fraud? John, do you do much of business with fintechs?
We do. I know I'm on like a webinar, so I should probably be a little more diplomatic, but
webinar that's recorded up on the internet forever. So yes, my advice to you is be diplomatic.
Yeah, I'll try to be delicate.
There you go.
Certain fintech firms we've met with, you kind of wonder where the credit person is, right?
Right. That's a fair statement. I would agree with you. So that's not inflammatory.
Nice if, okay, you got one grizzly, 30-year banker there that, can at least talk to the algorithmic geniuses. I've always maintained a healthy skepticism of all algorithmic lending, but I was proven right last cycle, but, we'll see now. But, that's generally the challenge with fintech lenders is it's all the technology, right? And, if the inputs are wrong, then the technology breaks down, right?
Quote, here's the quote from Bloomberg, quote, financial technology companies, i.e. fintechs, handled 75% of approved PPP loans that have been connected to fraud by the Department of Justice. More than 100 loans at the center of the case shows fintech companies arranged just 15% of PPP loans overall.
I mean, that wouldn't surprise me because, again, I don't necessarily know it's the fintech lender's fault, but I think borrowers who have, bad intentions are more likely to go to these online sources where they know there's not as much
scrutiny.
Yeah,
absolutely. Absolutely. A couple of questions that have come in. Paul says, do you know if SBA has honored the guarantee to the has been honored the guarantee that has been caught up in a fraud situation? Is there any data on repairs or denials with PPP loans? The answer is no, right, Lance?
Yeah, but that's going to come up. And it's a good question, Paul. There has not, I've not heard of a guarantee being honored yet on a PPP loan, but we're going to see it.
Yeah,
that question's going to come up. There's going to be a PPP loan that a lender made where fraud was involved on the part of the borrower, and the lender's going to want the guarantee paid.
Well, the call Katie and I listened to from SBA is they want to just get these loans forgiven. The impression I got is if it's charged off, there's a different budget allocation. There's different levels they have to do, different congressional oversights. So they want to go the forgiven route. But if it's egregious and there's fraud, they're going to go ahead and start popping them. They will do that. Sherman asks, do we know if there will be guidance for forgiveness for 2021 second round loans? I understand SBA has already started forgiving 2021 loans. Is that correct, Lance?
They are forgiving some 2021 loans. The forgiveness process really is not going to change from what I've heard. There is a push to streamline forgiveness on the 150 and unders, but it's already, and there's a push to streamline it for that EZ category as well, but it's not happened yet. It's your PPP loan forgiveness is full process. 2021 loans can be processed if they spent the money and the covered period is complete. Even if the covered period is not complete, if they spent the money on appropriate categories, they can submit for forgiveness. Now, the guidelines on servicing and guarantee purchase we're still waiting on those.
The community financial institutions have used all their money up. When did that? I assume they have by now, right?
Do you know that, Katie?
I know that there was like $8 billion a couple of weeks ago left for the community thing. I assume that's been used up, right?
I don't know. Katie, do you know?
I don't know. I'm sorry.
Well, we'll track that down next week. Yeah, $8 billion, no problem. I love how we're throwing these numbers out these days.
I know when there was some left and I don't know if that ever got filled or not.
Well, it cuts PPP officially ends June 30th, correct? Or was it May?
But they've quit accepting applications. I think they ran out of funds, to be honest. I think they ran out a couple days before the May 31st cutoff. I think there was some mention about it being the 28th or so that they ran out.
But what happens if they, we'll track that down next week. We're speculating. But if something came in May 25th and it got processed, we have until June 30th to fund it if they can get a number. Hey,
I was surprised.
Katie, you got about 1 minute.
They ran out of money. I mean, anecdotally, it didn't seem like PPP round 2 was going to be as robust, but it ended up being.
It was. What did Mr. Shaw do, Katie?
Yeah, so this is a kind of, I don't know, fun case if you like following these things, but of course it's sad. This man attempted to get $3 million in PPP loans from 2 different SBA lenders. On one of the applications to one lender, he claimed that his wedding planning business employed 126 individuals and that his average monthly payroll expenses were over $700,000. Which should probably be a red flag because I don't know if that's normal for a wedding planning business. So of course that application did get
That's a lot of weddings. Yeah.
It is, which is probably why it got denied. That's probably a big red flag there. So he went to a different lender and again told them 126 employees. This time he bumped it down a little bit to $600,000 in monthly payroll expenses. That one actually got approved and he ended up getting a $1.5 million, which he then turned around and used to pay off his home mortgage. And then he purchased 2 Teslas, 2 freight trucks, and a Mercedes-Benz van. I'm not sure what he was planning with that. That seems like there was a plan there, but he definitely had a plan with what he was doing.
And what's sad in this case, since he paid off his house, I assume they're going to seize his house, guys, right?
Absolutely.
Yeah. Okay. We have a couple more. We'll save them. We will tease on that. But the reason why we're bringing this up is this is what's happening. Don't do this at home, and be aware of it. Russell says the money ran out 528. Russell, thank you very much. And Sherman follows up. They had funds set aside for loans with hold codes, so those funds have been set aside. We had one loan that had a hold code is now showing under review. So Lance, I assume that's a good thing?
I think it is, Bob. I've heard that there's still money set aside for the hold codes, but
Right.
I don't have confirmation of that. But
John, thank you so much for joining us. Everyone have a nice weekend. Katie, Lance, thank you very much. We'll talk to you next week. And thank you for joining us today for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.
have a great day.
Have a great day.